we are prepared to raise rates further.
Prepared to raise interest rates? What prompted Tiff Macklem to say that this week in a speech? I watched it so that you don't have to. Here are the top 3 things that I found interesting, like price stability, inflation expectation, and the forecast for the rest of the year. So stay tuned to the end. We're going to be talking about if there is potential rate cuts coming for Canada in terms of what the policy rate is at the Bank of Canada. But if this is your first time here, my name's Nick and welcome to Ways to Wealth. We know the Bank of Canada's main goal over this past year and a bit has been to get inflation under control, and they've been doing this by raising the interest rates at a pace that we have not seen in a very long time. Now, when we hear from Tiff in a bit, we'll hear about how that progress has been, but more importantly, where we are going to be heading in the future.
We are encouraged by this progress, but we expect that getting inflation from 3% to 2% is going to be more difficult. Our current projection has that happening only by the end of 2024. And in this context, I want to be clear. Our job is not done until we restore price stability. In other words, until inflation is centered on our 2% inflation target.
And Tiff wants to make this clear in the sense that the Bank of Canada is focused on getting that inflation target to 2%. We are expected to see 3% at the end of this summer in 2023, but Tiff notes that we probably won't hit that 2% till the end of 2024. So when we talk about price stability, what does that mean? That means for you and I, the consumer, to have confidence in the Canadian economy that we can know year after year, inflation is only going to be 2%. We can start going to buy houses at mortgage rates that are affordable. Know that our money is invested in not decaying away due to inflation. This is the price stability goal of the Bank of Canada, and they are going to achieve that with a 2% inflation target. Now, obviously, the biggest question still remains is that how in the world are we going to get down to 2%, especially when the Bank of Canada is only projecting this to happen in almost a year and a half from now? And one of the things that the Bank of Canada is watching closely is inflation expectations, where we expect inflation to go as the consumer. So let's listen to what he had to say there.
The other thing we are watching closely is inflation expectations. If people believe inflation will remain high for the long term, they will pay higher prices now to avoid even higher prices later. And that only makes it easier for businesses to keep raising prices. Recent surveys have shown that inflation expectations of consumers and businesses have edged down. But our latest survey of consumer expectations indicates that Canadians' concern about inflation is still high, even if it looks to be easing. And too many people still think CPI inflation will be high over the next 2 years, or higher over the next 2 years than our own Bank of Canada forecasts it will be. Longer-term inflation expectations remain consistent with the 2% target, which is a good thing. But we need to see shorter-term expectations coming down so that companies get back to normal pricing behavior and wage growth moderates.
To summarize, if the consumer believes that the prices of goods will continue to rise, then they are going to buy it today, which creates demand. Also in this video, Tiff talks about how we've added so many people to Canada, 1 million people last year, increasing our population to 39 million people. When we talk about the effects on this is that those people will create demand. They'll come in, they'll start working, they will want homes as well. So this is some of the factors that will actually lead inflation to stay higher than that 2% target over the long run. And this is something that obviously the Bank of Canada is taking into consideration and getting to the point where they may have to consider raising rates to push the economy further down and get to that 2% target.
Our target is 2% inflation. We forecast inflation. The interest rate is the instrument that we use to make that forecast come true. So what happens to interest rates is going to depend on what happens to the economy. We raised rates very rapidly. We know there's lags. We've taken a pause. When we did it in January, we called it very deliberately a conditional pause. It's conditional on inflation coming down broadly in line with our forecast. And if we start to see evidence accumulating that it's not, that we're getting stuck, we are prepared to raise rates further. And so I think it's pretty clear from that characterization that we're really not thinking about interest rate cuts. And as I said earlier, the lesson from history is cutting prematurely will probably, that's going to end up being more costly down the road. So yes, it is too early to really be thinking about interest rate cuts.
Sometimes personally, when I hear this stuff out of the Bank of Canada, I wonder how much of it is just lip service, how much of it is just talk. But when I hear some of the things that Tiff is saying, and based on the information that we have today, I have to take this as true in terms of inflation not getting down to the desired level till the end of 2024, and obviously having to jump through a hurdle, the challenge of getting it from 3% down to 2%, could even cause a potential next rate hike. We have to take these things into consideration because I'm hearing too much that the bank needs to cut rates, and I don't think that's going to happen unless something extremely drastic happens. When we talked about inflation expectations, people still to this day think in the short run inflation could go higher. Until that mindset changes, we're still in the same position that we're in today. We talked about price stability. If people don't know where the economy is going to go in 3 months, 6 months, next year, they're going to be hesitant to be making decisions. And that even goes for businesses as well. And when we talk about where we're at on a population standpoint, Canada had a great year for immigration. And when we saw those GDP numbers from the first couple months of the year, they didn't look all that great, to be honest with you. We added 1 million people. We only have 39. How come those numbers weren't looking a little bit better? These are things that we need to consider. Are we on the downward path still? Yeah, probably. I mean, look at what inflation, look at what interest rates have done since January of 2022 at 4.5% on the policy rate. It's been an absolutely crazy year, but with all things considered, we have to remember that the Bank of Canada's main goal is 2%, and they're going to do whatever it takes to get there, whether it is killing the economy to do so, or if they even have to raise rates one more time. So let me know down below what you think. Is the Bank of Canada going to raise again, or are we going to have a hard landing where the economy suffers? And make sure, if you like this type of content, I cover Bank of Canada videos all the time. Check this one out and check this one out. We love talking about the Bank of Canada here, so come back, hit that subscribe button. I hope you all have a great week in the markets. Happy trading.